Traders, welcome back to another price action trading lesson. We're looking at S&P 500 mini futures. And we're going to use today's chart to understand price action and how it develops in your mindset that you need to have. Now, today's price action wasn't easy to trade. There were very few setups. The market overall didn't really offer a lot of opportunities for traders to really capitalize on taking good setups. And for this reason, we're going to mainly talk about the structure as it's going to develop and kind of mindset that you need to have and what to expect rather than talk about each singular setup. So right now, when I'm observing a structure like this, I can see that the structure is a little bit more bullish. Now we gapped up and we are definitely more bullish because we cannot even close below EMA. We are creating higher lows and higher highs. So based on price action, this is indicating to me that we are trading a bullish trend. Now, there are two ways how I'm going to draw the channel. This is important. You're going to see what it's going to lead to. Now, if I'm going to draw this channel, it fits very well off the lows, but we have a small break and a new extreme. And there's also a second alternative where I can draw a channel like this. It doesn't really fit that well. It fits better off the highs and I can treat it as a spike and a channel. Either way, both of these channels give me a bullish bias. Now, I have to respect the bearish downtrend where I have a break and a new extreme. And right now, I have to decide. Because this price action is pushing above EMA. Even if I'm playing the channel with the break and the new extreme, I'm not thinking bearish. Why am I not thinking bearish? Because this downtrend played out with the break new low and the main structure was bullish. And because I want to follow the overall trend, that's the price action trend line rule, I want to follow the main trend, which is bullish. I'm leaning more towards bullish continuation than bearish. And now it's important whether you're going to pick high low or failed second entry short. Now in a situation like this, where I'm not sure if a channel has a break and a new extreme or channel is still in play, I prefer to see a failed second entry short. Remember, when you decide between high low or failed second entry short, high low is used when you see a clear break and new extreme of the correction, in this case, this bearish downtrend, or when you are sure that the wider channel is still in play. And where you're not sure, or when this correction is stronger, you can make a case for wider channel, you're going to look for failed second entry short. So this is the distinction that goes through your mind. You can see we have a high-low confirmation setup, and shortly after we had a failed second entry short. Now, you can enter these based on the channel you played. If you played a spike in a channel, you can take the high-low. You can even consider the failed second entry short as a double bar entry. But this is the distinction between the setups. I had a break in new extreme, so I created break in new low for the downtrend, and I wanted to see a failed second entry short. Now, market continues working higher, and as a price action trader, right now you're just observing what's going to happen. All uptrends played out with the break new high. But your next step now is pay attention to this bullish lag that is creating the new extreme. Okay, this will give you information what are the intentions of the big players. And you can see that the market continues working higher. So this is important. Already straight off the bat, we can see that the bearish pullbacks are minimal. And we have consistent, healthy looking uptrend, a lot of small bars working higher. So now you have to make a decision to ask yourself, is this looking like a reversal or correction? It's not. Even though we have a break new high of the channel at the very beginning, now I have to admit and recognize that the structure is still very bullish, is still looking quite strong bullish. I'm not looking to sell. I'm still going to follow the main structure, the main bias. And I can even look for potential wider channel, something like this. It fits pretty well off these highs. So what's going through my mind is I want to see price action pull back to the key entry point. I want to see a high probability setup at the key entry point. I cannot just buy randomly far from the EMA like this, because 8 or 9 times out of 10 it's going to reverse pull back. Let's see what's going to happen. But you can see we're far from the EMA, so market doesn't allow me to enter, so that's okay. I'm being patient, I'm not jumping the gun. And once again, you're waiting for a second entry long at the EMA. That's what's going through your mind, because structure is clearly bullish and I'm just following the trend line rule, the main bias, and I just want to see the pullback to the key entry point in the form of a high probability setup. Okay. Still, this is what I'm expecting. Okay, we're breaking the channel. Okay, now we have new high, first entry long, little break low, second entry long. Didn't trigger, can I get high low? But we don't have trigger lower. Okay, no high low form, and now we created the new extreme. So even after there's a break, new extreme, we didn't get high low, but this is what you're expecting. So today, unfortunately, lackluster, because you can see we never pull back to the EMA. It doesn't really happen often. 8 or 9 times out of 10, we're going to get a pullback to the EMA in the form of a two-legged pullback. Today didn't happen, but I hope it is clear how you analyze the structure like this, what's going through your mind, that once you establish the fact that this is bullish, you're pretty much not overthinking it. You're just waiting for market to pull back. You reset the count at each new high. You're using the price action counting technique. So right now we have a break in your extreme, so we're pausing, looking to go long, and market continues working lower. Okay, now if you're thinking about reversal, you cannot reverse the market just yet. Had there been a great failed second entry long, you cannot reverse the market just yet. This was way too long of an uptrend, way too bullish. And in fact, when I was watching this live, I was even eyeing a little bit wider channel, something like this, I believe, that the channel was still in play, because this channel has quite a lot of empty room, and it was a little bit concerning. But we have, I'm going to measure the first leg, I'm going to copy it. You can see perfect measured move. Actually, to the very tick, if you watch my last video, you can see how powerful these two-legged pullbacks are, these measured moves. So this is one of the tools that price action traders use, and you can see, if you're aware of this, it can explain what price action is doing. But the wider channel was also very tempting. So once again, now you have to make a decision. Remember, we talked about high-low and a failed second entry short earlier. So now you have to make the same decision. If you're playing the wider channel and you're thinking it's going to need new extreme, which is what I was thinking at the time, I didn't read it correctly because this was too bullish. I expected push to new extreme. Am I able to take high-low, or I need to see failed second entry short above EMA? I need to see a failed second entry short above EMA. First of all, the channel is not fully confirmed. It had a lot of empty room, but more importantly, take a look how strong and deep this bearish pullback was. This was not ordinary first leg down, break, second leg down. No, we had many smaller pushes working lower. You can see there are smaller X inside of this, small legs working lower like this. So this tells me that the downtrend is a little bit stronger. And when I'm watching this, even though the overwhelming bias is bullish, okay, which this is the main bias you're following the main channel, when the correction is this strong, it doesn't look like it played out, and there is a case to be made for wider channel. I want to see failed second entry short. So if you were playing today the wider channel, you're expecting new high, you need to see a failed second entry short instead of high low, and a failed second entry short never triggered. There was no break above this high. Market created a break in new extreme for this downtrend. So now you have to think, okay, what's happening? Because market is reversing all the way down. This is where I adapted to this channel as a breaking extreme, and market continues working lower consistently. This is a deep retracement. You have to adapt now. What's going on in this market? So we traded all the way down without any pullback to the EMA, no opportunity for us to sell. But because we continue working lower so strongly, I'm gonna find even additional channel like this, because there's a break new low, but the push to new extreme is enormous. It's even larger than the first leg. So this bearish push is stronger. So because this bearish push is stronger than just ordinary break in new extreme, I want to locate another channel. I can also look for a channel like this, but at this point it's not fully confirmed. Okay, we're going a little bit sideways. I can see that we are flattening a little bit, not touching the EMA, so we have a spike in a channel. Price action is correcting. Now, even though this is looking bearish, I cannot just sell for centuries. I still would like to see two-legged pullback at the EMA. Okay, we have a second entry short here, but it's far from the EMA. I cannot take it. Too close to these lows. New low first entry short. Second entry short didn't trigger. Okay, we actually have a somewhat of a failed breakout at the top of this consolidation, because market is consolidating and this spike in the channel needs to get new extreme. Because this is a failed breakout and it can be treated as visual two-legged pullback, more aggressive trader can consider. By the time we get lower high, it's too close to these lows, no room to scalp out, we cannot take it. And then you have a failed second entry long, but the same problem, it's even higher than the lower high, no room to scalp out, it's going too sideways, we cannot really take it, and market continues working lower. So when we were trading to the upside, our goal was to find a channel and look for high probability setup at the EMA. When the market is trending to the downside, I'm applying the same rules. I never want to see these candles on a chart without a pattern, without a channel. Okay, I'm observing the EMA, how well it is rejecting prices. I'm observing how the two-legged pullbacks are forming or they are not forming, and I'm looking for possible channels. So right now I have a break new extreme. Okay, we're going sideways, but because this move down was so significant, you can see from this point all the way down here, this begs the question if there's a possible bigger channel. So I'm gonna copy, put it at the bottom, channel like this. There is so much empty room, which is not ideal, because you generally like to see a series of lower highs, lower lows. You like to see push phase, correction phase, push phase, correction phase, nicely filling this channel. But this is the best we can get right now. So when I see a break in extreme, I want to see failed second entry long below exponential moving average. Because this channel is not really that confirmed. It doesn't fit that well. And we had move up, move down. So this is not trend day just yet. This is range day overall. So I want to see a failed second entry long to be truly sure. If this would be lower high, what the lower high would confirm? Well, not really much. Especially if the channel is not truly confirmed. I really want to see the trap failed second entry long below EMA. Lower high is bad anyway. Bad body, not full at EMA. And we cannot get failed second entry long. And market reverses to the upside. So right now, you need to pause, because you cannot sell above EMA like this after this bullish push. So right now you're going to observe, okay, if we're going to continue working higher, I'm going to adapt to potentially wider channel. But if we're going to push back below EMA, I'm going to keep the wider downtrend in play. That's what's going through my mind. And because we are breaking below EMA like this, what do you expect? Well, I'm going to reanalyze the structure. This correction visually resembles like a first leg, break, second leg. We are at the two-legged pullback again. So this is good. When something in price action resembles a two-legged pullback, generally it's going to act like a two-legged pullback. So I'm going to use this instead of looking for wider uptrend like this. So right now I'm going to combine this. This information told me the bullish momentum played out. This downtrend needs to get new extreme. So I'm expecting a failed second entry long below EMA. By the time I get a failed second entry long, it's so far down, so far from EMA, I cannot really take it. And even though it worked, we cannot break the rules. So you can see no setups for us to take today, even though the structure can be followed fairly well. Now I'm using a wider channel because with the main bias channels, you tend to draw wider. But we have small overshoot. So what's going through my mind is because this downtrend needs to get new extreme. And you can see this shortened channel working lower. What are you expecting? Well, you're thinking about some pullback to the EMA and you're going to observe how the EMA is going to react. Because the trend down is not over yet. Okay. You have a break, new extreme. Now we're above EMA and there's no setup we cannot sell. So at this point, if there is a setup above EMA, I can't really take. So I would need a lower high below EMA because this trend needs to get new extreme, the main one. While market continues working higher, completely reversing. So I need to adapt. Notice how far this bullish move retraced this bearish move. This was a strong bullish push. We didn't get new extreme, and this is concerning for a trader. EMA flattened, and we are observing a lot of price swings up and down, up and down. I definitely need to redraw this because this tiny first channel is not taking into consideration this entire move. So I cannot go short because there is present bullish trend, but also I need to respect the trend range. The structure is not acting bearish now. I cannot argue with the market. I need to follow the market I get. And this was such a strong bullish reversal. I just need to treat it as a trend range for now, some variation of a trend range, okay? Because there is a chance that this was close enough to consider new extreme that sellers may consider this retest. So because we do trades too far up, right now my mind respects the trend range, and I'm thinking about second entry long at the EMA because this is the most recent uptrend, and I want to see second entry long at the EMA, but the EMA is not holding. By the time I get a second entry long, it's below EMA. Not good for me. Can I get a high low above EMA? So this is a second entry long below EMA because this channel right now needs to get new high. So I'm thinking trend line rule. And when something is wrong with the second entry long, just like in this case, it's below EMA, I want to see high low. Okay, this is horrible looking high low. Basically bearish doji inside bar. You know, context-wise, it worked, but it probably couldn't have formed worse. So, not too excited about this. Unfortunately, we can't take it, and we created a new extreme. So I'm pausing, looking to go long. And remember, I'm not drawing a channel like this because I'm trading a trend range we traded down into. So remember, if something resembles a two-legged move, stick to it, especially in ranges, okay? And price action created, and also you can see first leg here, I'm gonna copy it, second leg here, and this is probably the best measured move. You can see how perfect the price action looks on a high time frame. This is the first move, price second move, to the very tick measured move was reached. So if someone tells you the price action is random, you cannot believe them. Now there was new low, first entry short, second entry short, fell breakout, tempting setup. But because EMA was rejecting strongly, you really need to be a good trader. But because the bar is small, the measure move was reached, uptrend played out. You know, you expect price action to pull back into trend range, so I can mark it as a decent setup, but definitely for more skilled traders. Now I'm thinking about second entry short at the EMA. Far away from EMA, everything, no good setup, so I need to adapt. Okay, we're going higher, just following shortened channels. No trade zone, I can't really see good setup. Price action is working lower, so I'm going to redraw a shortened downtrend. So now what I'm thinking is I expect for price action to continue working lower. There's a small break in new extreme, but it's so tiny. There's a big chance we're going to reach new extreme. And now we have pushed above EMA, and now we have second entry short. But this second entry short first push above EMA. You can see we first push higher like this, and then we managed to close below EMA. The bar is way too big, and I didn't feel comfortable taking this. But price action wise, this is not a bad setup. So for this reason, I'm going to mark it because I know a few traders took it. So if you took a trade like this, not the worst setup, but EMA was supposed to hold here. The fact that we pushed higher, I wanted to see a lower high, which didn't form. And now actually, if you're observing without taking this setup, you can consider taking the failed second entry short here, because this really shows that a lot of sellers must have been trapped. So market is reversing, so I need to follow this bullish momentum, and I need to locate some bullish channel. So I'm gonna try to connect all of these swings at the very beginning. A lot of times market geometry allows you to spot where the beginning of the channel is. So this was serious bullish momentum. Are you worried about failed breakout back into the trend range? You're not. Why? Because you didn't make it to the support series of high lows, and you push so far from the trend range, you cannot even consider this as a failed breakout because it was too bullish, too far up, that right now it looks like a brand new uptrend started, especially with the geometric formation of the lows at the beginning of the move. I have a new high, first entry long. Can I get some second entry long high low at the EMA? no tick lower, very close, no high low, and once again nothing. So unfortunately, no setup again. Once again, very rare, because a lot of times we're gonna get some setup, at least second entry long or high low. This time we didn't get anything, just one leg down for a entry long. You don't really see that often. For this reason, today was extremely lackluster. Okay, we're breaking the channel. So what you're thinking about, you're expecting new extreme according to trendline rule. It's simple. Every single time you have a channel like this on a chart proven, you're following the trendline rule, which means you're not thinking about selling. And when you have a break, you expect new extreme. So I cannot buy below EMA. I want to see push above EMA and some confirmation setup. First entry short, second entry short failure. We have a failed second entry short, but you have to use double bar entry. We didn't push fully above the EMA. And this is very tempting. This is second entry long, high low confirmation setup of the failed second entry. Should we have a new high, first entry long, second entry long, above EMA, and we need to get new high. Downtrend played out, you can see first leg down, second leg down, but notice it didn't trigger right away. It stalled. Had it triggered, you need to take it, but because it didn't trigger right here, it stalled, it got even more sideways, and we should wait borderline, you know, because those two legs are so broad that we expect new high, and market created new extreme. So every single time you have confirmed channel on the chart, keep it simple, follow price action rules. So now we have a break and a new extreme. And once again, you have to ask yourself, how is the market reacting? Okay, right now I'm expecting some stronger correction or possible reversal, but we're back above EMA.